Hello traders, welcome back to the EURGBP Trading Academy. Today we will analyze the Euro against the GBP on the weekly time frame, and we will also look at the lower time frames in regards to the price action. But before we get started, I would like to remind you that all the information in this video is for educational purpose only, should not be considered as the financial advice. Don't forget to subscribe to our channel as usual and click the notification bell. Let's get started. The Euro GBP on the weekly time frame. It seems like this is the turning point when the trend is changing. Well, at least it started to look that way between 0.84 support and 0.92 resistance area. And this has been going on actually since the 2016, since the September more or less. And since then, price hasn't been able to produce a long-term trend. In fact, it has been stuck between this range for too long. So what is happening right now, or what happened recently, is that price yet again rejected this top, this massive supply area. We had this rejection just literally 2 months ago, and now we see that the price is starting to decline. If we go to the daily chart, we can see that there was a very strong support formed near 0.8880, and this support got broken along with a 200 simple moving average. So now our lower lows are in place, and it seems like this is becoming a downtrend. Now on the forward chart, what we see is that there is the average price downtrend trend line, or the resistance trend line. It was the support, then price broke to the downside and it acted as the resistance. Now right there at this spot on the 28th of January, there was the rejection of the trend line along with this support area that has become the resistance. It has been rejected first as the support, then we had the breakout consolidation, now it became the resistance. And most interesting is that we are able to produce a new lower low after this rejection, and this might suggest a strong bearish pressure, accumulating bearish pressure on the Euro GBP, which might result in a big downside move. And back to the weekly chart, what we see here is that right now we are breaking below the 200 simple moving average. There was already break prior to that, after which price rejected the resistance, and now back to this moving average. And if I zoom out the chart, we can see that here we have applied Fibonacci retracement level to the last wave down prior to the price moving up, and we have also applied Fibs to the last wave to the upside. So there are two Fibonacci indicators, and both of them show important levels. The first one is this Fibs, where we have 88.6% retracement level at exactly 0.86 psychological level, so very important price. And then we have also 78.6% Fibs at 0.84 area. Now this 78.6 Fibs corresponds to the 88.6 based on this Fibs, and makes it the second potential downside target for the expected downside move. We have also here two channels. One is the big one, and this channel, the bottom of it, corresponds to the support area at 0.84, and this is pretty long-term price perspective, so it could be taken about 2 to 3 months for this target to be tested if this will be in fact a downtrend. But the nearest support, as it seems, is located at psychological level 0.86, and this means that there is a potential for 200 pip move decline. Now, of course, it is possible that this resistance area at 88.80 will be retested, so we might be seeing a correction up and then the downtrend. But it is very important that this resistance remains respected, because if there will be the break to the upside, then it will invalidate the bearish scenario. So we need to have the price below this level at all times in order for the trend to continue. But all in all, we can also expect the correction maybe towards the trend line and then continuation to the downside. And in the reversal case scenario, we are likely to see the break to the upside, correction down, and then we might be seeing the uptrend. But for now, there are no confirmations that the price is going up, so bearish trend holds much higher probability in comparison to the trend reversal. So that's on the EURGBP, where the price is expected to move quite a lot. Based on the first target is 200 pips, and if we move to the second, it's a 400 pip move. For the EURGBP, it's a substantial price move, and it might take a month or two or even three. So this is the long-term price perspective, and it shows that the euro could be very weak across the board, or the pound could be very strong, or both at the same time. Now, speaking about the pound, let's move back to our previously made analysis and look at the pound pairs. We have two of them, the pound Swiss franc, which we continue on watching, and we see that the resistance got broken. So there is strength in pound, in fact, and we might be expecting this move of 250 pips. Because of this breakout, bullish sentiment is confirmed, and it's likely to move towards the 2470 resistance area. And also we have the pound dollar, which is also still a valid analysis, although it's a bit risky since it's right at the top and the price could be correcting down. But all in all, it seems very interesting, this opportunity for the upside move. Buyers could be watching this price area to be retested, of course, at 135, where previously we found the resistance. Although the new cycle has started, it was expected to be bearish. The price broke above, and now this area at 136.00 is the support. It was nearly tested, in fact. So maybe buyers are taking this and looking forward for this growth. Now let's have a look at the dollar Swiss franc. Well, expected this correction, and this is perfect. We just testing now 0.9000 resistance, very strong psychological level. So at this stage we might be starting to see selling pressure increasing. So this was a correction to the upside, was expected, especially towards this resistance area, and it looks like it might provide a good selling opportunity. All in all, it's a bearish trend, because originally we were looking at this support which got broken, and now this resistance seems to be very, very attractive now for the sellers. Australian against the United States dollar. This was our analysis of the last week, and as you can see, guys, we have tested this level that we were expecting, and in fact price bounced off. Now this bullish flag hasn't been broken. There was this spike, then there was another spike, so we failed to close below the previously made spike, making it still a valid potential bullish flag, and this might result in a very strong and rapid price growth. But obviously, as long as we hold this support area between 0.7460 and 0.7400, very important support for the Australian against the dollar. And finally, Swiss franc, Japanese yen. Well, here we expected the correction down towards the moving average. This is what happened. We can see that there was a few attempts to break below, spike produced. Now we had yet another spike, but failed to close still with confidence below the moving average. So as long as we have a 4-hour closing price above this level, 116.71, it can still reverse to the upside. And if there will be a break and close below on the 4-hour chart, it will invalidate bullish outlook. In that case, it might be going down. So let's watch for this support level and see how it goes. So that's it, guys, for today. We hope you enjoyed the EURGBP analysis. If you did, smash the like button and subscribe to our channel to follow the videos we do on a weekly basis, and of course click that notification bell. We'll see you very soon, and we wish you loads of profits, good strategy and consistency. Take care, see you soon.